What is happening, Bitcoin fam? Get ready for a rapid-fire rundown of the biggest stories shaping the crypto landscape today. We're diving deep into a market that's hotter than ever, with developments that could redefine the future. Are you ready for the unmissable updates? Let's get straight into it. First up, we're talking about the potential trajectory of Bitcoin in 2025. Is the volatility we're seeing now a sign of incredible opportunity ahead, or a warning of what's to come? We've got the insights you need to navigate these choppy waters. Then, we're shifting gears to corporate strategy. A major player in the tech world is making a bold move to significantly expand its Bitcoin holdings. We'll break down their ambitious goals and what it means for their treasury and the market. Next, a revolution is brewing in the mining sector. A tech giant is launching a game-changing piece of hardware designed to shake up the established order and challenge the current market leaders. This could be a major turning point for mining efficiency and accessibility. And finally, we've got a shocking price movement that has the entire market buzzing. A massive whale transaction has sent ripples through the system, pushing Bitcoin's price in an unexpected direction. We'll analyze the fallout and what it signals for the immediate future. Stick around, you won't want to miss a single second. Don't forget to smash that like button, subscribe to the channel, and ring that notification bell so you never miss an update. Bitcoin's 2025 forecast, opportunity or omen. As we look ahead to the pivotal year of 2025, a critical question looms over the digital asset space. Will Bitcoin's inherent volatility prove to be a catalyst for unprecedented opportunity or a harbinger of significant challenges? This is a question on the minds of investors and analysts alike, as the cryptocurrency navigates its post-halving landscape and a rapidly evolving macroeconomic environment. The price swings we've witnessed are not merely fluctuations. They are data points that could inform the very trajectory of Bitcoin's value and adoption in the coming year. Understanding Bitcoin's volatility is key to grasping its potential. Historically, Bitcoin has been characterized by dramatic price movements, often experiencing sharp rallies followed by significant corrections. This pattern, while daunting for some, is seen by many as an intrinsic part of its growth cycle. The upcoming period is particularly scrutinized because of the increasing institutional interest, the maturation of regulatory frameworks, and the growing integration of Bitcoin into traditional financial systems. Each of these factors can amplify both the upside potential and the downside risk. For instance, increased adoption by large corporations or the approval of more Bitcoin-related financial products could drive prices upward, while regulatory crackdowns or major security breaches could trigger sharp declines. The interplay of these forces in 2025 will be crucial in determining whether the volatility translates into lucrative opportunities for early adopters and strategic investors, or serves as a cautionary tale for those who underestimate its unpredictable nature. Analysts are closely monitoring a multitude of indicators to gauge the sentiment and underlying strength of the market. Network activity, such as the number of active addresses and transaction volumes, provides a fundamental perspective on Bitcoin's utility. Concurrently, on-chain data, including the behavior of long-term holders and the flow of assets between exchanges, offers insights into market psychology and potential supply shocks. The macroeconomic backdrop, with interest rate policies, inflation data, and geopolitical events, also plays a significant role, influencing investor appetite for riskier assets like Bitcoin. Furthermore, the development and adoption of Layer 2 solutions and other technological advancements within the Bitcoin ecosystem could unlock new use cases and enhance its scalability, potentially driving demand and stabilizing price action. The narrative surrounding Bitcoin is constantly evolving, moving from a niche digital currency to a potential store of value and a global payment network. As 2025 approaches, the market is poised for a period of intense scrutiny, where every piece of data, every regulatory announcement, and every major adoption news will be dissected to determine if Bitcoin is on an upward trajectory or facing a period of consolidation and risk. The community is abuzz with predictions, with some anticipating a bull run fueled by scarcity and growing adoption, while others caution about potential regulatory headwinds and the inherent risks of a highly speculative asset. The consensus among many seasoned observers is that while the path forward will undoubtedly be marked by volatility, the long-term fundamentals supporting Bitcoin remain robust. The key for investors will be to distinguish between short-term noise and long-term trends, positioning themselves to capitalize on the opportunities that emerge from this dynamic market. But is this volatility just a prelude to a bigger story? We're about to uncover how a major tech firm is doubling down on its Bitcoin strategy, and it's a move that could reshape corporate treasuries. Semiconductor giant bets big on Bitcoin treasury expansion. In a significant development for corporate digital asset adoption, French semiconductor designer Sequans Communications has announced plans to raise up to $200 million through an at-the-market equity offering. This strategic move is primarily aimed at bolstering its Bitcoin treasury, signaling a bold commitment to the cryptocurrency as a core component of its financial strategy. The company's ambition is not just to hold Bitcoin, but to significantly expand its holdings, with a stated goal of accumulating 100,000 Bitcoin by the year 2030. Sequans, already a substantial holder with over 3,000 Bitcoin, currently valued at approximately $331 million, is positioning itself as one of Europe's most aggressive corporate adopters of digital assets. This latest financing initiative follows a recent $189 million raise through secured convertible debentures and warrants in July, bringing the company's total recent financing to roughly $376 million. This aggressive fundraising underscores a clear strategy to leverage capital markets to aggressively acquire and hold Bitcoin. Chief Executive Officer Dr. Georges Karam emphasized that the share sale authority will be employed judiciously to optimize treasury, indicating a calculated approach to expanding their digital asset reserves. This strategy, however, is not without its potential drawbacks. Analysts point out that funding Bitcoin purchases through equity offerings could lead to the dilution of existing shareholders' stakes. Moreover, it heightens the company's exposure to the inherent price volatility of Bitcoin, a characteristic that has long defined the cryptocurrency market. Despite these risks, the potential rewards are substantial. By significantly increasing its Bitcoin holdings, Sequans aims to benefit from potential long-term appreciation of the asset and establish a strong presence in the burgeoning digital economy. The company's long-term vision of holding 100,000 Bitcoin by 2030 is an ambitious target that places it among a select group of corporations prioritizing substantial Bitcoin reserves. This strategy is often viewed as a hedge against inflation and a way to participate in the potential growth of digital finance. The decision to expand its Bitcoin treasury reflects a growing trend among forward-thinking companies to explore alternative asset classes and innovative financial strategies. As the digital asset landscape matures, such bold moves by established companies like Sequans could pave the way for broader institutional adoption and acceptance of cryptocurrencies. The market reaction to Sequans' announcement has been mixed. While some investors view the expansion as a positive sign of confidence in Bitcoin and a potential driver of future growth for Sequans, others express concerns about the dilution and increased risk associated with the equity offering. The company's ability to navigate the volatility of Bitcoin while simultaneously managing shareholder expectations will be critical to its success. The strategic allocation of capital towards Bitcoin is a testament to the evolving role of digital assets in corporate finance, moving beyond mere speculation to become a strategic financial tool. Sequans' aggressive approach could set a precedent for other companies considering similar diversification strategies. This bold corporate move sets the stage for a fascinating look at innovation in the mining hardware space. Get ready, because a tech titan is about to drop a new modular miner that could completely disrupt the industry. Block Inc. unveils Proto Rig, a modular revolution in Bitcoin mining. In a move poised to challenge the long-standing dominance of Bitmain in the Bitcoin mining hardware market, Jack Dorsey's Block Inc. has partnered with Core Scientific to introduce the Proto Rig. This innovative modular mining system is engineered for effortless upgrades and reduced maintenance costs, aiming to dismantle Bitmain's near monopoly, which currently holds an estimated 80% of the market share. The Proto Rig represents a significant reinvention of mining hardware, harkening back to the early days of Bitcoin mining with its modular approach, a concept not seen since Bitmain's S1 ASIC rig launch in 2013. The unveiling event, held at Core Scientific's facilities, saw Dorsey himself in attendance, alongside other key figures in the Bitcoin mining industry. The Proto Rig's primary innovation lies not just in its processing power, but in its holistic design, focusing on enhancing the overall mining experience. Unlike traditional mining rigs, the Proto Rig's modularity allows for seamless component swaps and upgrades, drastically reducing repair frequency and maintenance overhead. Perry Hathai, blockchain solutions architect at Block, highlighted this focus, stating that the device is not merely competitive but profitable because, if it's not running, efficiency doesn't matter. This philosophy shifts the industry's focus from raw chip specifications to the broader design and operational efficiency of the mining rig as a whole. Hathai drew parallels to the data center industry, noting that the Proto Rig incorporates decades of best practices developed for scaled-up data center operations, a stark contrast to the historically less refined designs in Bitcoin mining. Eric Cativo, a Bitcoin product developer, praised the Proto Rig's design, comparing it to beautifully designed Swedish telecom hardware, underscoring its clean aesthetic and thoughtful engineering. The project also emphasizes domestic manufacturing, with plans to build components in the United States to improve supply chain reliability and capitalize on new tariff incentives. While the ASIC chips themselves are currently sourced from Taiwan, Block Inc. has aspirations to localize chip manufacturing in the future. Max Guys, product and ASIC lead at Proto, confirmed that the system is vertically integrated, including their own chip, and can offer various configurations with efficiency ratings as low as 14.1 joules per hash. The Proto Rig's design is practical, with a chassis measuring 39 cm by 29 cm by 50 cm, capable of housing 9 boards, 6 fans, and 3 modular power units. It supports liquid cooling, and its modular fans suggest adaptability for various use cases, including enterprise mining and the growing home mining sector. Notably, Jack Dorsey tweeted, "A commitment to all the players in the mining industry, not just the big guys," hinting at future products tailored for home miners. However, the initial rig model, a 12-kilowatt system, is best suited for operators with existing infrastructure due to its higher power requirements, though future retail-friendly products are not ruled out. Furthermore, the Proto Rig will support Stratum v2 out of the box, a more efficient protocol designed to enhance security and decentralization by enabling hash rate providers to control block template production, thereby safeguarding Bitcoin's censorship resistance properties. This integration addresses the slow adoption of Stratum v2 by mining pools, as Block's hardware will promote its use. Block Inc. is also open-sourcing its mining management software, Fleet, which consolidates various tools into a single, user-friendly interface with features like secure boot technology, automated alerts, and potentially AI-powered insights. Despite the detailed reveal of the hardware and software, pricing and specific configuration options are handled directly by Block's sales team, with rigs already shipping to customers. This pioneering hardware development is truly impressive, showcasing a new era for mining. But what happens when massive market movements hit? We're diving into a recent price crash and the whale activity that triggered it. Bitcoin price plummets below $110,000 amidst massive whale sell-off. In a dramatic turn of events, Bitcoin experienced a significant price correction, falling below the crucial $110,000 mark. The sharp downturn, which occurred over the past 24 hours, saw the world's largest cryptocurrency by market capitalization drop to $108,890, according to data from Bitcoin Bulletin Pro. This marks one of the steepest corrections the market has witnessed in recent weeks, a stark contrast to its trading high of $117,000 just last Friday. The primary catalyst for this rapid decline appears to be a colossal sell-off orchestrated by a single large Bitcoin holder, often referred to as a whale. Over the weekend, this entity liquidated its entire position of 24,000 BTC, a transaction valued at over $2.7 billion. This massive divestment sent immediate shockwaves through the market, triggering a cascade of selling pressure and significantly impacting Bitcoin's price trajectory. The whale's activity, which involved transferring the Bitcoin to an entity named Hyperunite and continuing to sell portions even today, directly contributed to the ongoing downward momentum and heightened market volatility. Such large-scale movements by major holders are known to significantly influence market sentiment and price action. Despite the sharp price drop, the broader market sentiment, as measured by the Bitcoin Fear and Greed Index, has not yet fully succumbed to fear. The index currently stands at 48 out of 100, which is classified as neutral, but hovers precariously close to the fear zone. This index is a critical tool for gauging investor sentiment, reflecting whether the market is driven by excessive fear or greed. A score of 48 suggests a cautious approach from investors, indicating that while concerns are rising, outright panic has not yet set in. Historically, a sentiment score in this range can precede either a further downturn if fear takes hold or a potential rebound if buying interest emerges. On-chain fundamentals, however, paint a more resilient picture, even as the price falters. Bitcoin's hash rate, a key metric representing the total computational power securing the network, is notably approaching a new all-time high. The current daily hash rate is reported at 909,080,589 th/s, inching closer to the record set on August 4th, which was 1,084,828,947 th/s, when Bitcoin was trading at $115,149. This robust hash rate suggests that the network's security and integrity remain strong, with miners continuing to invest in computational power despite the price decline. This resilience in network fundamentals often serves as a long-term positive indicator for the cryptocurrency. Furthermore, historical profitability data offers a measure of reassurance for long-term holders. Bitcoin Bulletin Pro data indicates that holding Bitcoin has been profitable for an astounding 99.1% of its existence. This statistic underscores the asset's long-term growth potential and its historical ability to recover from significant downturns. While the recent price action has undoubtedly rattled short-term traders, the underlying strength of the Bitcoin network and its proven track record of recovery provide a foundation for optimism among patient investors. The market will be closely watching whether the Fear and Greed Index dips further into fear territory, and if other whales follow suit with large sell-offs, which could introduce additional turbulence in the coming days. This massive sell-off certainly shook the market, highlighting the unpredictable nature of crypto. But what does the future hold? We'll wrap it all up with a quick recap and tell you how to stay plugged into all the breaking news. And that's a wrap on today's massive updates. We saw Bitcoin's 2025 outlook debated, a tech firm make a huge Bitcoin Treasury play, a revolutionary new mining rig emerge, and a whale sell-off shake the market. Stay informed, stay ahead. Like this video, subscribe to Bitcoin Bulletin for more, hit that notification bell, and follow us on all our socials so you never miss a beat.